Hi, my name's Harper Jones with Life with Leverage. We coach people on the infinite banking concept and helping people get their policies set up. Today, we're going to talk about requirements for a infinite banking concept style policy. Now, I have a couple bullet points I'm going to go over, and this by all means does not mean that we're going to cover every little detail, but it's going to give you a great snapshot of what you should look for when you're looking to incorporate the infinite banking concept into your life. So one of the first things is we're going to want a dividend paying whole life insurance policy. And we're going to want to have that with what's called a mutual insurance company. In the insurance world, there's going to be mutual companies and there's going to be stock companies. Majority of them, like 95%, are stock insurance companies. The only difference between the two is how the profits and earnings of those insurance companies are allocated. In a stock company, it's for the benefit or the earnings are allocated towards stockholders. And in a mutual company, the stockholders are actually you, the customers, like a policy owner. So if you have a policy with an insurance company that's mutual, you get to actually partake in some of the profits and dividends of that company because there is no stockholders. You are actually getting ownership. The more premiums, the more cash you're flowing through into your dividend paying whole life policy. Another thing is we want a very financially stable mutual insurance company, which most of them are because they've been around over 100 years. For example, two of the companies we use is Emeritus Life and Lafayette Life. And Emeritus has been around since 1887, and Lafayette as well has been around over 100 years. We want to make sure that they have been paying dividends each and every year since they've been in existence, which Emeritus and Lafayette both check those boxes. Now, there is a difference between strong financials like balance sheet and the income statement and cash on hand and debt to capital ratios with these companies that you could dive into. And I'm happy to send more of those resources and what to look for if you reach out, which I'll give you some info at the end of the call. But at the end of the day, there's something that's ratings, with insurance companies that third parties actually rate these insurance carriers. And there's actual financials you could objectively look at. So for example, AIG back in 2008 had this AAA rating or A+ rating from these different companies, these third-party companies, but then they ended up blowing up and failing. So ratings aren't everything. They could be bought. You want to make sure that you're also paying attention to the financials themselves. We also are looking for a company that understands what we're trying to do with infinite banking. Some insurance companies, mutual insurance companies, do not care for you borrowing back and forth from your policy, even though you'll have a contractual ability to do so. So they'll make it harder to access your cash or borrow. We want to have an insurance company where we can completely and totally borrow and they understand what we are doing. They understand the infinite banking concept. Maybe they're involved in some of the Nelson Nash Institute think tanks each year and coming and sending some actuaries or some VPs. We also are looking to design policies for strong cash value, not just in the beginning, but over the mid and long haul, because that's very important. If we're putting cash in these policies, we want to start being able to access that cash as early as we can by not losing the mid and long-term benefits. We're also going to look for a policy that's designed in a way where we're not crossing a threshold called a modified endowment contract or MEC limit. So think of it as a ceiling that we're trying to get cash in there, but not cross or touch that ceiling. So it's kind of an art in how to design the policy and go about it. And that really goes back to the agent and the coach you have setting up the policy and system for you. Now, here is something that's very important in these two next points is how easy is it to access your cash? So if you have a mutual company who's very open to infinite banking, they might be able to process your policy loans or the ability to access the cash within a handful of business days to a week versus maybe a few weeks. So that's a great thing that you want to pay attention to. You also want to make sure that the company has flexibility in funding the premiums. For example, you're going to have different parts of a premium, like a base premium and a flexible paid up additions rider typically. And you want to make sure that you have the ability to fund a lower amount, a higher amount, and when and how you fund it, because some companies are more strict than others. And then a lot of people will look at what's called an illustration when they're getting a policy and say, hey, this illustration's outperforming company over here. So company A is outperforming company B. I want to use company A. But Maybe company A has a little bit better cash value accumulation or growth or numbers on a projection or illustration, but how quickly can you access your cash? If it's going to take you twice as long, you can miss out on a great opportunity to go double your money or get 20% of your money outside of the policy, right? So that's very important. You also need to take into consideration just home office in general with that insurance carrier, how quick and efficient you can be accessing your cash or being able to pay a premium or being able to repay a loan or change a beneficiary or any of those other things. Accessing your policy information, being able to access online, easy access to your agent and what they can do for you, so on and so forth. Now, also, when you do take a loan, you're going to have these loan provisions. You want to make sure you're checking out, hey, what is that loan interest rate on the policy when you borrow? That's another factor as well. Now, not all these factors are end-all be-all. You want to kind of look at it as pieces to a puzzle and which one is going to be the best puzzle, say, for you, which me being a agent and a coach in infinite banking, I know which companies are going to be the best interest of you, and I also have those policies myself. Now, another thing is after the policy is set up, you want to make sure you're getting continual coaching and education from whatever agent you do end up using. If that's me, I'll be around to coach you, have annual reviews, you'll have access to our team to help service, and so on and so forth, and have more resources like these videos coming out. But if you choose to use someone else, just make sure you're getting all that offered as well. Now, if you or anybody you know is looking to learn more about infinite banking, you can reach out to me at harper@lifewithleverage.com, or you can go to my website at lifewithleverage.com/contact. Looking forward to hearing from you.